Hi, everybody. My name's Connor Farley. I'm one of the co-founders here at Truvius. And today we're going to be doing a performance comparison across several different DeFi index style investment products that are available on the marketplace today. So August has come and gone. We're in September now, 2025. And we're going to be looking at performance from three different time periods: the trailing month ending August 29th, the trailing 3 months ending August 29th, and the year-to-date period ending August 29th. And we're looking at performance from the Truvius DeFi Fundamentals Alpha product, which we'll talk about what that is. But in short, it's a long-only, actively managed investment product in DeFi assets. And then we have the Grayscale Decentralized Finance Fund, which we'll talk about that, and the Bitwise DeFi Crypto Index Fund. So two index funds from other crypto asset managers. So starting with performance, we can see that the Truvius DeFi Fundamentals Alpha product had a fairly strong August. We'll dig into why that is, but we see here positive performance for Truvius versus some of the negative performance we've seen. And then we see similar patterns for both the trailing 3 months and the year-to-date period. So let's dig into some of that performance comparison. Starting with performance from Bitwise's DeFi Crypto Index Fund, we see the most negative returns for the month, and actually all three periods, the trailing 3 months and the year-to-date period. Interesting to note that all products have been down. The DeFi sector in general has been down year-to-date, but as a asset manager, what you want to try to do is be less down than the market, at least on the active management side. So that's what we're seeing for Bitwise. Moving over to Grayscale, we see they're in the middle here, less down than Bitwise for the year-to-date period, more down than Truvius, and the same holds true for the trailing 3 month and trailing 1 month periods as well. And then we see the Truvius DeFi Fundamentals Alpha product, and we've had a really strong August, and we want to talk a little bit about why that is and some of the factors that may be contributing to that. Specifically, one of the things we'll want to talk about is how we were able to achieve outperformance or positive performance during a month where some of the other competitors in the DeFi index investment product landscape saw negative returns. So let's dig into that. And a good first place to start when evaluating performance is looking at the various holdings that are in these investment products. Taking a look at those holdings, we have a snapshot here of the various assets that are in all three of these products. We're going to come back to this table, but I think it's important to establish how these assets even came to be in these products. All three of these products, they use either a custom index or an index from another provider. So stepping through the Truvius product that we're going to look at today, we use our own custom DeFi index that we manage to, and we try to actively weight the assets by going overweight assets we like, underweight assets we dislike, but we use a custom index that we've created ourselves for our DeFi investment product. The Grayscale DeFi Fund uses CoinDesk's DeFi Select Index. The ticker for that is DFX. And Bitwise, similar to Truvius, also uses their own custom DeFi index, and we'll show how Truvius's and Bitwise's differ. Another important thing to consider when looking at investment products is the rebalancing frequency. So how often do these managers rebalance the products? Starting from right to left this time, the Bitwise fund rebalances monthly, the Grayscale fund rebalances quarterly, and the Truvius DeFi Fundamentals Alpha product uses a combination of drift-based rules and time-based rules. So we don't set arbitrary or periodic rebalancing frequencies based on simple time-based rules. We'll look at how much the realized holdings are drifting from target holdings, and if they drift too far, we will automatically trigger a rebalance. But we're careful to not do that too frequently because we don't want to invite over trading or over rebalancing. So we also set time-based rules on top of the drift-based rules that say you can't rebalance if it's been too close to the previous rebalance. We think that's a meaningful way to achieve reaching your target allocations without over rebalancing and incurring too many trading costs. So those are the indexes that these products use, and the rules of those indices determine which assets are held in these products. We see the Bitwise product holds about 10 assets, Grayscale holds about 6, Truvius holds about 9, and these are sorted on the page by descending market cap. Looking more closely at Grayscale and Bitwise, we actually see that the holdings, for the most part, are generally similar. They mostly hold Uniswap and Aave. About 65% of both of those products are those two assets. And then there's a similar grouping around Maker, Lido DAO, and Curve, where they also generally hold close to the same amount of assets here. And that's here on the page. So you can see these allocations are pretty similar between both of those products. But then we see a difference, most notably where Grayscale's product holds a pretty substantial portion of Ondo, and then Bitwise's products hold a more diversified collection of smaller cap assets. So that's one of the bigger exposure differences you're going to get between those two assets. Grayscale's is holding a larger chunk of a larger cap asset, less diversified. Bitwise is holding more diversified, smaller cap assets. So you pick where your risk might be coming from. Do you want greater concentration risk, but you take on a little bit less size risk, so you have less exposure to the volatility that comes from smaller cap assets? Or do you want more diversification, but diversification within smaller cap assets, which are known to be more volatile? As a portfolio manager, something that interests me is that the Grayscale and Bitwise products both hold Maker. And Maker was the former governance token for MakerDAO, but it actually rebranded to an asset called Sky Protocol. And this was announced a little over a year ago now. The actual rebranding didn't take place until this year, but I think it's important that we look at a timeline of what happened with Maker as an asset that's held in these DeFi index products. And we can see that the very first announcement that we saw of this rebranding took place about a year ago, August of 24. And then later that year, towards the end of the year, the co-founder of Maker confirmed that the migration was going to be taking place and that there was going to be a conversion so that holders of Maker could replace their asset with Sky at a 1 to 24,000 Sky token conversion. In May, that became official. The Sky token became the official governance token for the Sky protocol, effectively saying there are no governance rights associated with this token. And at this point, more forcefully incentivizing the migration from the Maker token to the Sky token. This is the point where Truvius removed Maker from our portfolios because we didn't see an economically valid reason to continue holding Maker, considering that the protocol is outright migrating the asset from one to another, from Maker to Sky. And what happened subsequently is we can see this reflected in prices, where Maker was one of the assets we saw that really didn't experience some of the substantial gains that the rest of the DeFi sector experienced. That could be for several reasons, but one of the larger one is, from our point of view, because Maker is being sunset, it no longer has an intentional, valid economic use case going forward now that the Sky token is replacing it. So we saw some actually huge gains in some of the larger cap DeFi assets, Uniswap, Aave, Lido, but Maker unfortunately missed out on those gains. In September of this year, the month that we're currently in, exchanges are going to be delisting Maker as a tradable token and listing Sky as a tradable token. Now, there are reasons that indexes may still be holding Maker. One of them is they may still be meeting the market cap and liquidity thresholds that the criteria of those indexes require. And so they say, hey, we're not going to kick this out until we reconstitute at our scheduled time in the future. One of the risks that this poses, however, is a potential rush for the exit or liquidity crunch where people want to get rid of their Maker token and those index products are still holding it. So we'll see how that fares over the coming month and whether that has any performance bearing on these non-Truvius products. Now looking at Truvius's holdings, we see that Truvius holds about 9 assets, but 3 of them we hold at a fairly minimal weight. Another way of saying this is we hold around 6 positions in a more concentrated way. So Yearn, Synthetics, Compound, Lido, Aave, Uniswap, we hold more weight in those assets. And that can actually shift around where sometimes we want to be more overweight Curve and more underweight Lido. So these might be flipped or switched. And we can actually take a look to see whether that happens for Truvius products. And then we'll talk about why we do that and how we do that. A good way to start looking at that is at a time series of the holdings of these products, so we can see how often and by how much do these asset constituents fluctuate over time. Taking a look at Bitwise, we see that it holds 10 assets, and there's a fair amount of consistency over time of what those assets look like in terms of how much is held in the product. That makes sense for a market cap passive style product. This is what you would expect to see from a typical index like product that says we hold weights at market cap. So market cap weighted products tend to be more fixed or less varied in terms of the constituent weights of the assets. Moving on to Grayscale's product, we actually see similar behavior, fairly consistent amounts consistent with the market cap of each of these 6 assets. We can see it previously only held 5 assets. It now holds 6. Ondo Finance was included into the index managed by CoinDesk, and that has since entered Grayscale's DeFi Index Fund. Then we take a look at Truvius, and we can see right away there's a fair amount of differentiation between Truvius's holdings and those of Grayscale and Bitwise. And what you see is there's much more variation in terms of the amount of assets held. We've intentionally obscured the names of the assets here because we don't want to reveal at what times we took positions in what assets. But what we intend to show here is that there's a lot of active management going on. And so it's not just a static composition of assets that stay more fixed over time. You can visually see the amount of active management going on with Truvius holdings. Based on certain times, we will want to be overweight certain assets and hold other assets at less weight. And that's different from a purely market cap index like product where you're just holding basically all the assets at market cap, which is just reflective of holding the market. One question you should ask is why or how does this come to be? This comes down to our factor-driven process, the way we apply active management to crypto. Our models automatically know when and how to overweight or give more weight to DeFi assets that our models like according to the data that we ingest. And we automatically know when to take away weight or underweight assets we dislike relative to the others using the data that we ingest. Our system is constantly ingesting large volumes of on-chain and off-chain data to measure valuations, to measure the activity that's occurring on-chain, and to measure the outright levels of this activity and these valuations, and how those valuations and activity have changed over time. To recap and leave you with some takeaways from today's video, when you're comparing investment products across asset managers, one of the first steps you should look at is the constituent assets, the holdings in those products. What assets do they hold? How many of them? How do they weight those assets? And what are the sizes of those assets? Are they small cap? Are they large cap, mid cap, etc.? From there, you want to take a look at how those assets are rebalanced. Is it a fixed schedule based on some time measure like monthly or quarterly, or something that combines both time-based and drift-based rules, something a little bit more active than pure time-based measures? And then you want to look at, is this a pure passive product or is it actively managed? And if it's presented as an actively managed product, how actively managed is it? In what ways is it actively managed? At Truvius, we wouldn't consider simple rebalancing to be true active management. Rebalancing, we feel, is just an inherent part of managing an investment product. Active management to us means having some sort of view or active take on how to rebalance or give weight to assets that you think will outperform and underweight assets you think will underperform. And the intention there is to deliver excess returns. And ideally, as is the case for us, we design those excess returns to be uncorrelated to the index. Finally, you should take a look at the fees. Do the assets held within this product and the degree of activeness and rebalancing together justify the fee associated with that product? Thanks for watching, and I'm excited to see you in the next video.